Are we recording now? I believe we are.
Yeah, I'm looking at NC. It's like 55%. So it's not for sure, but it's 55% long. But
So you are selling it?
no, I'm still buying it. I think it probably just bumped up. I mean,
Yeah. Go ahead.
yeah, it's been bouncing around. So I think it's still indecisive because it's been going into the profit, then it pulls back for a little bit, and then it shoots back up.
That's okay. 55 is not so much. If it starts going higher, then I would just. I mean, I know you will monitor it as well, but 55 doesn't really make difference. Anywhere between like 45 and 55 is like a midpoint. It won't really tell you as much as from fundamental side. So most likely technicals will follow. But here, what I was going to mention is I like to see mainly this number between 60 and 70%. It plays out the best. But as long as this doesn't start pushing, above 80, we should be good as far as fundamentals. But all the technical is aligning. Here the rejection of 23.6 fibs, which indicates still strong, continuation of the bearish trend.
Oh, good.
I agree.
Look at this.
Let's see. I think we have some questions here.
See, and we have questions. Let's see.
Hey, Harry, how you doing, brother? Mark, what's up? Vian, sorry if I don't pronounce that right. I probably don't.
I think it's Wayhan, maybe. Wayhan?
Okay.
Possibly. I don't know.
Yes. He was here earlier. He did pop
Okay,
up.
nice. Oh, he was here for the early one. Nice.
Yeah. He was on a New York session, which we started a little bit late because I had some Wi-Fi issue. I don't know why. Usually, Fios is pretty good, but anyway. We can take a look at your NC real quick. Is it NZD CAD or CHF?
CAD.
Let's see. Don't trade that pair that much.
Yeah, I don't usually trade it much either, but like I didn't really look at it. I just saw the signal earlier today, and I just took it. I should have looked into it more because I was at work today, and I was like, oh, it's the first trade I see.
So you are in what, buy or sell?
Yeah, I'm gonna buy.
In a buy. Oh, this is looking good. Yeah, it should keep pushing to this resistance right here.
That's what I was thinking too. Let's see, that's 848.
Yeah, about 50 pips.
Oh, that's perfect. That's all I need.
Yeah, this week is pretty bullish.
Right?
Let me just check something. So yeah, I was like I said earlier on the London session, for those who are just new here, the way I analyze pairs, we can just break this down since our boss Sean mentioned he is in this. The way I do it, like I start obviously on the weekly, just gives you bigger picture. We are not concerned with all this down here, obviously, because the price is way above this previous structure low. So what we look for the key zones in the current vicinity right here. So I usually switch to the line chart because it gives you those curves as a good indication of strong reversal zones. You see, yeah, here it broke, but it was fails breakout, came back down, broke again, made a double bottom, and then it eventually broke through and continued its way up. But like you see the key zones right here, I like to see something like this, where it perfectly, respected the zone. So that's, right here. And, those are things I look for. Also, what you can notice from here, it's like an inverted head and shoulder. And usually when it's on the weekly, it's a beautiful thing to see if you are in a long. So let's say start from here, bring it back down there, and this thing should just keep going right here.
Nice.
Let's align this shoulder right here, so we get the full. Okay. So and if you bring back to the candle, you see how that works. Plus, we have this, trend line on the weekly as well. That we definitely can aim towards. This should be a nice 150 plus move 150 pips to the upside. I don't know why this keep popping. I'm pretty sure I have premium, so I will have to check that later. Yeah, anyway, this is, if you are already in this, you can just trail your, stop loss. You can hold this, in my opinion, for a longer term, at least another 50 pips. It is the pair that, it's not very volatile, like gold and GBP pairs. So, it might have to actually hold this for, a few weeks to reach that level. Not sure if there's any major NZD news coming up that will, give additional push and liquidity. But yeah, in my opinion, this is where, it's headed right here, at least to this trend line. Also, another thing, as far as the price action, we had like 1, 2, 3, almost 4 touches here, but you see the 4th touch, it did slightly broke through, but it just came to the resistance. So when it comes to like the major zones and trend lines on the weekly, any touch, after like 3, like here we have 1, 2, 3, any next one can just be the break. It doesn't mean that it's going to continue rejecting it, but for the most part, in like a high percentage of the cases, you see, rejections for the first 3, and then after that, there's a possibility that this will break. So, I definitely see it coming up here, but possibility here and maybe up higher. Just depending how NZD economy does. I know they've been struggling a little bit. They kind of move alongside with the AUD because it's the same area, even though AUD has a lot going on in their economy, and it's been the weakest pair for the past 2 years. So let's just clear this up because we already saw that. And yeah, so going back to the line chart, that's how I identify my key zones. The thick blue lines, they present weekly support and resistance. The green thinner lines I usually mark as usually most of the time daily, like intraday. If you trade this, as you can see here, after this break, is definitely gonna come to at least here to this resistance. Because why? Because it broke the daily intraday support. Well, now it's support. It used to be resistance before it broke through, and it made this nice W. And until it reaches this weekly resistance, I don't think we will get any pullback. But once it gets here, we can get something like this up to here, and then go back up or maybe just break through. For the most part, we usually get at least some sort of retracement off of the weekly, key zones. Oh yeah, this is pretty bullish, man.
Yeah, it's shooting back up right now. I think I might just let it run a little longer. I was thinking about closing out right now in profit, but I'm probably gonna let it run a little longer because your analysis makes so much more sense. Like I was just going over the short-term movements, but now that you're showing the weekly, it looks perfect.
Yeah, this definitely looks better. Okay. Let me just see some. Yeah, you see how they like to trap. Well, this is well, if you want to consider it like a 4-hour intraday resistance, not that one, line. So right here, I guess leave it right there. But you see how it's breaking through, So I love when I see this. You see, this candle, it's probably tricked a lot of people and they start selling immediately, but then you see the indecision. And also when you see something like this, this candle formation right here, that's called vectoring. Vectoring indicates that the market and the structure is just rejecting that zone, rejecting. The sellers were trying to push this down, but it's just so much of a buying pressure that this, if this 4-hour closes above this level, 87,917, that's a great confirmation for you to continue hold and possibly enter if you are not in this trade. and you would like to be. So I really like it. Let me just see. Yeah, I don't think even if it does something like this, comes down, let's say the most I see the pullback would be to this like trend, and I see the next rise in it from here to that level. So yeah, I like it long. We can also check that's a let's see what they say. You were saying 55%. Yeah, that's not a major. It might give you small pullback, but overall it's still pretty bullish. Not pretty bullish. No.
Nice.
So you were saying you want 60 to 70% long for this trade. That's where you want it to be.
No, not for this one. For GJ right here. That's the one I sent in a group.
Why do you want 70% long?
But that is just so the way that most of the let's say big banks and hedge funds, the way that they trap us individual traders is brokers. They have to give information on how many orders are in the market and what they are, the average. So like, for example, however many people are in a buy or sell on this particular pair, this is just pretty much taking the data and statistics out of the market, how many orders are currently in, and which side is prevailing as far as the orders put in. That is another thing that market makers look for, and that's how they trap traders. They're gonna see, oh, people are still expecting heavy reversal here on GJ, but guess what? It's not ready for reversal. It's not ready yet. That's why I'm targeting still this downside movement before it reverses to this weekly support.
Gotcha. Okay, yeah, no, that makes sense.
Yeah, you see it, and see it's already keep dropping, and I know it's gonna keep dropping because everything is pointing out to that. So for that reason, that is just like, I mean, the best way to trade is if you can really master besides technical fundamentals too. Then pretty much you are always confident and know when to not end up on the wrong side. And you have to just think opposite of what everybody is doing. Just a little bit outside the box as far as in a forex, because people will see this and then they will, oh yeah, people are buying, so we should definitely get into this buy, because we don't want to be this 24% that is gonna get their money taken away. But guess what? This 24% is the banks and hedge funds that gonna put like billions once the London opens, and this is just gonna keep going down.
Right, that makes sense, dude. Yeah, so you always want to be on the opposite of it.
Yep. And just
only if it's below 80 though, because once it gets above 80, that's when it starts to it's trying to demonstrate like a reversal.
Yeah. If it goes to like 90, then it's kind of fundamental, giving you signals to not be too crazy, too aggressive. So, but just this rejection off of fibs, it's really good. Usually when you see only retrace 23 or 38 too,
Just be glad I'm learning something positive, okay? Because I promise you I'm gonna be good at it.
What's that?
Hey, whoever's talking, I don't know if you're going to talk in the group chat or if you just need to mute your mic.
My bad, I'm on it.
Okay.
Oh, good.
We have a question from Harry. 1 second. Just a little question. If the no one on JPY is, that means the trend. I'm not sure what I will try to rephrase the question. I think what you are asking, Harry, is yeah. So what I was pointing out, if we see this sentiment on any period between 60 and 70, let's say there was like 66 long, you know, I like to see that more. You know, that is when, you know, get a little bit stronger push to the opposite side. But even this is still fine as long as it not keeps rising, you know, above 80. Between 80 and 90, you know, that's when fundamentals are, you know, signaling to you, hey, maybe, you know, now is the time to think about, you know, actually going with that market, you know, for the majority of the part. But but this is just like I personally don't use this too much. It's just as an additional information for, you know, my technical analysis. I hope that answers the question. Let's see. Okay, good. Yeah. So, like I stated, I look for the, you know, weekly first. GJ's, this pair is just crazy. So what I was, let's you know, put this in perspective now. So this weekly candle right here, this was opening of the new year. Banks were closed, I believe, till like January 3rd. So this is when I remember, because I was fortunate to close the buy on that Friday before, you know, the market closed. Because once the market opened in the new year, I think, like I said, it was January 3rd, this dropped just 500 pips. Like it just shot down and came right back up. And the one thing to look for, the market in very high percentage of the cases ends up covering the, you know, it might not happen immediately, but it just leaves like an imprint in the market for the future, you know, and that is what we actually see. Yeah, it eventually came back up, respected that weekly zone, came to the next weekly zone, and then it just straight from there kept dropping. You can make a statement, yeah, this is, you know, United Kingdom, you know, PM, Theresa May, you know, re-signed. Also, they were not able to, you know, make that Brexit deal. So, you know, people lost confidence in GBP pairs, and, you know, foreign investors just pulled their money, and it was massive sell-off. Yeah, you can make that statement from fundamental, you know, side of market analysis. But, you know, you also see that, you know, price action coming into play. You know, I believe anything that happens in the market is just, you know, giving you future prediction. So one of the patterns I also look for on a bigger time frame is this. You see, you write this. I use parallel channel, but you can literally use just two trend lines to make this symmetric. And then, you know, I look for the breakout. You see, this is why it's important to look this on a bigger picture, because what happened, it broke right here, it came back up, retested this zone that we have marked really nicely, and look, just continued. Just continue from there. And you can look this on, you know, so many different, let's say, okay, so we have had this long channel forming right here for a while. Let's even, you know, we can look at it that way. Actually, let's do trend line. So let's do it like that. And another one right here. So this, you know, it was just a false breakout. So if you look at it this way, this is also considered a bearish flag on the higher time frame. You see, we had the impulse move down, then we have these corrections in between, and then we had a breakout. This breakout came down, it came back up to retrace. Let's see what the retrace on this was. So it was a little bit higher than 61.8, probably about 70.5 or 71, and then it just continued its natural way where it was supposed to go. So once you are able to spot these breakouts is what gives you more confidence where this market is headed in a long run. You can find so many of these. Like there's another one. Look, same situation, but this is actually I'm happy I see this. This is just a little bit different. So it was what looked like the another flag, but this is not the same like this here. It's not a bearish flag. This is descending channel. So once it broke and retested, it kept going up. So descending channels is a bullish reversal pattern, unlike this bearish flag. Bearish flag is after the impulsing move, you have this retest between here and then breakdown. So this market can actually head even up to this low right here, which is 126. So see how this zone is just imprinted, historically as as a next, future possible move. So those patterns are really important. I've struggled my first year of trading, being able to spot this, and I was like, oh, what should I do? How should I do? But one of my mentors explained me that these patterns actually just imprint the move. So that was another, and you can spot them pretty much on any time frame. We can go look for this on a daily as well. Let's see. Okay, so here we go. The one right here. That and this right here. This is ascending channel on a bullish market.
Hello.
Hey, how's it going?
Hey man, go ahead and mute your mic.
I think that was either Ronnie or Christian. Welcome guys. So what I was gonna say, this is example of ascending channel. We had one test, two tests, three tests. And one of the rules, it's not 100%, but for the most of the time, despite this being ascending channel, which is usually presented in the bullish market, bullish trend, is that you usually see reversal on the opposite side of how many bounces you have from one side. What I mean is we have one bounce here, one downside, two top, two bottom, and we had third one right here, and it broke out below. So if more touches we see on the top side, most likely it's going to break to the downside, and vice versa. So and like I said, this is on the daily, and you see the breakout, and all it did, it just came, he retested the weekly resistance, and it just kept going down. So it's really simple, and it's very high probability prediction in the market. You can literally spot these, and I like to use Fibonacci's just to give you more confidence. You see here is again slightly over 61.8, but if you are looking on the daily, it's also this daily zone. You see, just retested it and made double top on the daily, and it dropped. I don't know if you guys have any questions.
I do actually.
Yes.
What's that little thing down on the bottom right of your screen, where it says, it's basically telling you the overall trend, where it says it's a sell, like right over there.
He's talking about the technical analysis for the.
Yeah, like, do you have to set that there? Because I feel like, I mean, I haven't been around my computer for a few days, but I don't feel like I've seen that on mine actually, right down there where it says a pair and
What
right
this?
there, all that. Is that
Okay.
automatically there, or did you have to set that there?
No, that is a great question. I think that was Brandon, right?
Yeah.
Yeah, great question, brother. So this is just something that Trading View is manually. I can, by clicking here, I can just get rid of that. So it's here where you have your watch list. The first, I guess this looks like the notebook sheet, like with the lines. So if you click on that, these all pairs here is what's on my watch list. So you add all this manually. Which pairs you want to watch.
I noticed those. I just didn't remember that one there being on the bottom. So, but yeah,
Yeah,
no, I appreciate it. Probably a weird question, but I was actually, I'm kind of new to it, so
No. Any kind of questions you guys have? The time is now.
Can you tell me what the TP is on this one as well? Because I'm in it for the sell. I just don't know what the TP was.
On GJ, 1 second. I believe I gave 2 of them.
Probably good, whatever it is. This one's gonna go down for a while.
That's good. I'm excited about it. I love it. Yes, it was yesterday. Okay, so here we go. I don't know if you can see. First one is 133.50, and second one is at 1.33200.
Let me see if it's on the screen.
It's not on your screen, Honest. Are you sharing your full screen or just that one web page?
Sorry, that's a good point. New share.
I'll just screenshot it if anything.
Here we go. Can you see it now?
Yeah. I just didn't see it. I was scrolling. I just kind of didn't see it, but I seen you was live, so I just kind of tapped in because I was learning a little bit earlier. So.
Yeah. So those are 2 take profits. I did also added that I moved my stop loss because I saw the retrace. So I moved my stop loss. I believe it was 134 250. Where did I roll?
Perfect.
Yeah,
well, I appreciate it. I appreciate it.
And then I was looking to get into this second position for sell, but it didn't give us, that much of a pullback and the retrace. So it seems that it's just gonna keep dropping from here.
Perfect.
But yeah, this is just something that Trading View has, and it shows details. When daily open, previews, low, high. It is just more detailed information that you don't really need to overwhelm yourself with. It's just some more detailed. Some people who generate reports for the Forex market who are paid like Forex analysts, they do have to provide this detailed reports and include all of this. Because based on some strategies, people look for the opening, previews, lows, highs. It's just extra. Based on what I wanna teach you is just I wanna make it simple and easy to understand, so that you don't need to overwhelm yourself with all of that.
Perfect.
And we can just move that and gives us more room. So yeah, like I said, this is on the daily. You can see these patterns forming in many different ways. Even here is really not hard to spot them, and you just get in off of the breakouts. Pull that one. You see it just broke, retested, and it dropped, and it was a nice drop. So let's say you didn't enter immediately. Let's say you entered off of this candle this week, which retested the daily resistance, and from here it dropped. How many is that? 418 pips. I'm sure everyone would like that trade. Yeah. Well, if you go down to the week, 460 pips. So that is why it's important to look, the market on a bigger time frame. It just gives you, you know, more confidence. And once you know the trend and direction it's headed in, you just look for this. We can even go on a 4-hour if you intraday trade. So here we go, another example. Right here, we have pullback, you know, after this impulse push down, and that is another bearish flag formed, broke, kept going down. You see, all this here is order accumulation. You know, it's sold, then, you know, they play around with it, they play around, and it just continues, you know, where it's supposed to go. Same thing here, broke, we had a nice sell, now it's you know, accumulating more orders, you know, getting people in the market, and it just break below and it just continues down. You see, like, it's really really simple, you know. So you don't need, like, I don't have any indicator here, like there's literally nothing. And with what Sean you know, provides you guys with is just, you know, extra confirmation, like really sniper trades. So if this you know, was a bearish trend and you had this consolidation and it broke and you get K2 signal, so all you have to do is just sell it. If it gives you sell signal, you know this is dropping. So this is another 230 pips. It's just, you know, I was, you know, just trying to, you know, simplify it as much as possible, so for you guys, so that it's easier to understand. And this here, this is like up to date, like the current structure that we are trading off of. Here we had, you know, impulse move, consolidation, market accumulating orders, and you see it's breaking below. And where it's gonna go? It's gonna go down. Same principle, you know. And even if you wanted to trade, I think somebody had a question earlier. I don't know if they are on the call. I think Anthony, I believe, had a question about trading the pullbacks. Yes, you can do that for sure. Here, after you saw this wick and you see the bullish sign, you could have entered not on this first candle. You wait hourly to close. You can enter here and then ride it up for some pips, you know. If you want to scalp the pullback, this is 30 pips, you know. That I personally don't do that. I don't trade that. I trade, you know, bigger moves. I trade, you know, direction. It's just, you know, part of, you know, what I have, you know, experienced most success with. Not that I'm scared with that, but I rather, you know, have a better entry for a bigger move rather than, you know, guessing to what level of Fibonacci this is going to be the retrace, you know. I don't know if that makes sense. You guys agree, disagree? But yeah, you can, using K2 strategy, if you get the signal for a buy on a, you know, some retrace pullback, you can definitely do that. There's nothing wrong with that. We can actually add it, see if there was something like that. K2, and there was, you know, there was actually right here. This was a good, you know, signal. Let's see, this gave us, so you would enter right here, and yeah, 25 pips. You know, that's exactly, you know, what I was referring to. You had, well, actually, we would go on a 30 minutes to make it a little bit better. I think I was here. So you would enter. Yeah, it will give, you know, some pullback down, but nothing that will, you know, completely reverse it, and it came back up for that 25 pips. So you can do that, and then look what happens. We know we are in a bearish trend. We know where this is going overall on a bigger time frame, bigger picture. You got the sell signal, and since this last signal on GJ, this has dropped 56 pips. Beautiful trade. I know Sean likes this, using his Lambo lots. He loves those.
Yeah, definitely. It's nice and easy.
Yeah. So I hope that, makes sense to you guys. I just love, confluence with price action and K2. It is just, I think, once I do some more back testing and, find the best entries on a best time frame for both of them to, show that confluence, I think this will be unfair. It really has, it's looking great even right now without me, completing the whole back testing. And so let's see if we have any questions. Great question. Yes, so you can use Fibonacci extensions. So after this pullback, we would go from here to here, right? And if you want to use Fibonacci extensions, you have 1.27 here and 1.618. So you definitely could do that. After that this rejected and it's going that overall way, you could use those two extensions as your TP1 right here and TP2 here. This is more of a, I personally think, conservative way, more safer way. But this is really like only 15 pips from the weekly, support, which I believe it will be reached because of it's just more of a stronger structure for this to reverse. So that was a great question. Yeah, 1.27, 1.618 is I just add them on my regular Fibonacci's, so that way I don't have to use Fibonacci's and the extension separately. I just add them into the one. I don't know if anybody wants to copy this or write it down, the ones that I use and the colors I mark them with. The blue ones that are marked, which is 38.2, 61.8, and 8.86, they are more notable ones, and I'll explain why. So if you guys want to take a second to either set your Fibonacci's the same way or just write it down. We don't have more questions at the moment. I don't know.
Hi.
Yes.
Hello. Yeah, this is Hari.
Hey.
Actually, I have a question about this Fibonacci. Like I've seen many traders, they use the same trend, like Fibonacci basically. But what does this mean basically? Like for what purpose we use it? To see the trend where it is going, or what to calculate?
Okay, good question. So Fibonacci, the way the Fibonacci work in the market, it's like the algorithm. Okay, so they are very high probability for. Sorry, are you have more of a question to add or?
No, I'm just listening. Thank you.
Okay, so yeah, so Fibonacci is the way that they are developed is off of the algorithm, and the reason they are so powerful tool is because they usually are pretty much manifestation of the prices in the market. So that is why people use certain levels that are known as like when price reaches them, it shows us the reaction, whether it's a pullback or a rejection off of it, and gives us that prediction for where this is going. So it's made up of the algorithms and for that reason, people mostly use them. Some people use them, all different ways. But I just use it the simple and the one that I found to work, and it's exactly how I'm showing them to you. I don't know if that answers your question.
Yeah, I understand. Thank you so much. Just a little one more. Like you start this Fibonacci from the starting point, like from the top, right? Where this, yeah, exactly from the top to bottom. How we can use it in other ways, like only to measure the trend, only to manifest the trend the way it is going? Is it what this Fibonacci means?
So Fibonacci's, I'm not familiar that they are used for the trend. So the way you use them is when you see, okay, so this right here, let's see how we can mark it up for 1 second. All right, so let's find this. So you see this right here, this is the beginning of the impulsive move. So whenever you see the impulsive move, you follow it through, and it came right here. This is where this impulsive move ended, right? So once you start seeing this wick, or whether it's a full candle body that stopped this price from continuous impulse to the downside, and you start seeing the retrace, that is when you put the Fibonacci's in a play. So we already know this stopped right here. So you start from the bottom and you bring it back up, and then those Fibonacci's are used to measure this move. So since you already see that this price is gonna be stagnant for some time, in this zone, you use it to see where this retrace is going, how far this will go, and where I can find, another entry. Like if you have sold somewhere here, or even on any of those candles, you are now looking, okay, so is this going to show me, some confidence, and or it's gonna, bring the doubt, should I hold this sell further, what is it gonna do? And by looking at the retrace, you get your answer on that. So since we only got the retrace till 38.2 initially, the first one, that is a great sign that this market is still heavily bearish. There was a slight pressure from the buyers, but not enough to reverse this back up. There's nothing like this going back up. Once this retrace ends at 38.2, that's a great sign for the down momentum. Most of the time you will see 50, even 61.8, sometimes 70.5 or 71, you can round it up. And as long as you don't see pullback above 78.6 and especially 88.6, that means this market is not ready to reverse. It's not ready to be bullish yet. We still don't see any sign that this will just keep going back up, like these people think. So that is why it's important to look at that from that perspective, and why is it so powerful. So you see it came 38.2, consolidated a little bit, which is pretty much the orders accumulating in the market, and then it came back down to where? To that same level. Wick back again, we get a little stronger pullback to 50, and we get even stronger impulse to the downside. So does that make sense?
Absolutely. Thank you so much. This is exactly what I've been asking, that how to measure this. Thank you so much, my friend.
No problem. Any questions you guys have, don't feel shy. Don't hold it back. There is no silly question. There is no judgment here. We are here to learn together. I'm not the best. I study every single day myself, even after 2 years, and there's always something more to learn. And and also, if you have something that you would like to share, feel free to do that. Yes, I can't talk now. So yeah, let's see. Does anybody else have any question?
Yeah, we're open to any questions, guys. If you guys need any questions regarding any type of strategy or any type of analysis, feel free to throw out a question. We can help you guys out, whether it's Honest or it's me or Trent. We could all help you guys. So just feel free.
Well, Trent, sorry, I'm again here. Actually, I have another question regarding this weekly resistance and weekly supporter line you put on the screen, right? Yeah,
Yes,
weekly
let's
how, yeah,
I'm
how
listening.
how to put this? Yes, how to put this?
How
Weekly
to put
supporter,
them?
weekly resistance. Yeah,
Okay.
how to means like on what basis you draw a line at the exact the same place? Like what points you see to make a line there?
Great question. So are you asking why I have this arrow pointing to the upside, or you just referring to how I have this resistance and support?
Yes, I'm asking this how you have this resistance support, like weekly resistance and weekly support.
Okay, got it. Well, that's a great question. I'm gonna assume that you joined us a little bit late, so we're gonna go over that again. So first of all, obviously, you're gonna change, your chart out. Let's clear this up so we can make it easier and better for visual. Let's clean this all up. Don't you love marketing, Sean?
Right? I thought you had a premium account. What's going on?
I'm pretty sure I have, so that's why I'm gonna have to email them, see what's going on.
That's weird. Yeah, it shouldn't be coming up.
Yeah, otherwise I won't be able to use any of the indicators. But anyways, so going to your question about weekly zones. So obviously we're gonna change our chart outlook to the weekly, which is right here. From 1 minute up to whole month. We change it to the weekly, and then I don't put them on the candlestick chart. I change it to the line chart, right? So what I now look for is I look for these, sharp turns, sharp turns. The reason I look for them is you see how it here rejected, came back down, eventually broke through, and then you see retest off of that, came back up, retest again. So that tells me this is now strong support. It break above it and it never came back down. It just kept going up, came back down, and then eventually this was the breakout of the pattern that I was talking about. We had this, short-term channel going on, broke, came back up. This was some strong reversal. This was back in May 16. Probably was some major news, maybe related to Brexit, or some bad economical data coming from the UK. Can be a few different things. But like you see now, we get another, rejection here. This was, small false breakout. That's why, I look at the also candles later on, and I was pretty sure that was a wick, and it was, trying to trap those, sellers. So you see how it rejected, and then eventually break above, and then retested, kept back up, retested, back up, and then it was playing around it, eventually broke above it. This was also false breakout, and then kept rejecting it. So this is the reason for me to put this as a key zone, because there was a lot of turnarounds. I call those turnarounds. Price shows us strong reaction off of this zone. So for me, this is strong resistance right now. Same thing with this level here. You see how it was retesting it, playing around it. It broke for a short period, didn't even came further down, came back up, rejected this one, then respected it there, there, and this is what I refer trading in the zone. Once you have those zones marked up, you just trade between them. If it comes to your resistance, you look for the confirmation that there's not going to be breakout, or you're trying to wait out for a little bit. Obviously, you're going to go on like a 4 hour, because this is on a weekly, and you want to make sure that the market makers are not giving a false breakout, and that you don't jump on this bandwagon for the buy, because they're just going to reverse it back down. And same thing happened here. It made double top. People were thinking, yeah, this is gonna, keep going up. And no, double top is, on a weekly, one of the, bearish reversal patterns. So what happened after this double top, came back up, retested this zone, pulled back, retested again, and ever since just kept dropping down. And since this was, previous weekly support that it broke through, now that is the resistance. Some people refer to this ceiling, floor. I like to use, what I consider real market terms. It's, price resistance and price support, right? And now, since we have the breakout into this new fresh zone right here, we have this as a resistance. Because why? That was the last weekly support that it was broken a while ago. And you see where it's going? It's going to the next key zone, which is weekly support right here. It's not the best one. It's what I was trying to find as the most correlated to previous price history, which we had so much of consolidation in that zone, and I'm pretty confident it's going to reach there. And once it gets here, we can look on the smaller time frame. Okay, so is it finally time for this GBP to reverse? What is going on with them? Or are we going to get another break? In case that happens and we get this breakout right here, we're going to look for some sort of test. We're going to love to see this retest, and then we can keep taking it down. Can we do that? We look back, look left, trade right, and there it goes. Do we have any information back in the history as far as the GBP JPY price? Yes, we do. Look at it here. Has it ever been that low? Sure, it was. So it wouldn't be surprised if something like this happens. But this is just possibility for the future. Can I tell you right now whether or not this will happen? I can't. Because why? Because we are approaching really strong weekly support here, and really key zone that, like, here was rejected. So I don't know if that clarifies a little bit.
Yes, absolutely. Thank you, Brent. I got it.
No problem. You're welcome. In case we need to go over it 5 more times, we'll go over it 5 more times. I think we have a question. How many pairs do you trade? Do you only stick to those pairs? Do you journal your trades? If yes, can you give me a brief summary of what is in the journal? Look left, trade right. Love that. Good point. Good question, my friend. So the pairs I mainly trade, I'm gonna show you right here. So all the pairs that I have highlighted with blue is the pairs that I mainly trade. So XAU USD, which is gold, British pound, US dollar. Mainly pairs that I trade is the gold and all GBPs. I think I left out one GBP. Let's see. No, I should have them all here. Yeah, where's NZD? Yeah, I have them all. Yeah, so I mainly trade GBPs and gold, and the reason for that is because I love liquidity, and those pairs right here are the most liquid in the market. Now, let's say that I go through all these pairs and I don't see anything on them, meaning I don't see any good setup. Maybe they are still in phase of consolidation. There is no confidence for me to actually enter any trade on any of them. Then I go to the second tier of my pairs, which is Euro pairs. Euro AUD, Euro GBP, NZD, CAD, JPY. I don't prefer CHF. I'm not big on CHF pairs as far as the trading. I don't have exactly justification or reason why. It's just hasn't been my thing besides GBP CHF, and that is honestly my least traded GBP pair. I would add sometimes I like movement on USD CAD. I think I have USD JPY. Sometimes this pair used to be beautiful for trading, especially last year. This year we are in month of July, and probably out of 7 months it's been consolidating for 5.5, and for that reason I don't really trade it that much, even though long term I see this coming down to like 104, because I believe dollar will get weaker in upcoming months. And I think the second part of the question is, do I journal my trades? I'll be very honest with you. I try to do that. Sometimes I enter my trades from my phone, because I have TradingView on my phone, and I see it, come to my zone or come to that fib level, and I see the rejection, and I just enter. And I may be at work or at the gym or anywhere, and I would just forget to journal them. But there's on the market, I'm not saying you have to invest it. You can literally just buy notebook for 50 cents or $1 at the dollar store, and just handwrite your trades in. There may be we can look online if there is something like already like a spreadsheet, or even just making your own Excel spreadsheet for the trades. It's not a hard thing to do, so that you can keep track. But what I would personally do, I would put obviously date, and I would write the all price details. For example, we entered GJ at 1.34 sell. This was my stop loss. This was my TP. And I would write myself reminder. Maybe you have you probably have a much better memory than me. I do tend to forget sometimes, so I put myself a lot of reminders in my phone, or I leave at the computer where I do most of my work, to go back and put back in. Okay, it hit my stop loss, it hit my TP. And I would also highly recommend journaling your trades, guys, because especially if you're a beginner and you don't know what your favorite pairs are, what would you want to trade, and in what session, by journaling your trades, and after a month or two of data, of your own data and your own trading, you can see what pair you had most success with. Maybe it was GBP USD, maybe it was Euro GBP, and then it will give you more confidence in determining what pairs you feel most comfortable with. Okay, I won 8 out of the 10 trades on this pair, and here I was 5-5-5, so I'm break even. So maybe I should focus more on this pair, because it seems that my analysis is actually mostly accurate on this particular pair. So just stick with it. Another perspective to look at it. I think Sean said he trades 26 pairs. Well, Sean is a boss, so he can do that. I personally don't do that, because just think about it in terms of this, especially if you are just recently started with your trading career. If you try to watch all 30 pairs, and you don't have something in place like K2 strategy that actually gives you signals and good pointers to make it easier, and allows you to follow all 30 pairs, then you should find like 2-3 pairs and just focus on them. Learn their structure, learn their movement, try to determine what are the mainly price patterns that are repeating them, because the market repeats itself. That's why I say look left, trade right. What history tells us where we can go back to it at future point in time. So just focus on 2 and 3, because what I like to make illustration with is, if you are a guy or a lady and you're trying to date 10 people at one time, that is very, you know, time consuming. And will you actually have enough time to dedicate to all 10 of them to learn everything about them? You know, what movies they like, what music, where they like to hang out, what is their culture, their language, you know. You know, but if you only focus on 2 or 3, you're gonna have much more time. You know, you will get to know them better, and it's just gonna make it easier. You know, I hope that makes sense. So that is what I would really suggest you. The reason for me why I can watch these, because I know their correlation, and I've been also trading for 2 years. So I know if I'm looking at GA, GN is pretty much the same structure. Same thing with Euro AUD, Euro NZD. You know, those are, you know, the pair correlations, you know, that you look for. And for example, if you are buying GU, maybe you should look to short dollar on some of the pair, maybe UCAD or UJ. You cannot be buying and selling against USD. You know, that kind of contradicts, you know, dollar strength or weakness. I hope that makes sense. Yes, exactly, Sean, exactly. Yes, definitely. So Sean will, you know, share this information with you guys. What's been working most for him, the pairs that he had most success with. Anthony I have a trouble with my. So what do you mean, Anthony? You can unmute yourself so we can get a little better understanding. What is you know, preventing you from identifying it? What have you tried to do and it didn't work out? So we can, you know, try to figure out, you know, the action you should take, you know, from this point going forward. Is he still here? Don't tell me he left and he just wrote question. Oh, okay. No problem. I misunderstood that. No worries. That is fine. So what is the issue, you know, for you looking left, trading right? Like let's go with this pair. This pair is, in my opinion, the best when it comes to the, you know, price action and the technicals, which is, you know, gold. Question. Okay, so like price action. Yeah, so let's try to, you know, clarify a little bit more here. So we I hope you understood already that, you know, how we mark those key zones, the were you here for that part, like how we determine our weekly resistance daily? Okay, yes. So since we have our major zones, right, and we already know that, you know, this pair is going to stay here for some time between this. Oh, I think someone has a noise in the background. So since we already have our zone in which this structure is currently, you know, stuck for some time, and we're gonna look to trade in between, right? So when you say you have trouble, you should go on a lower time frame and look for these rejections. You see, let's say you were not sure that this was weekly resistance and you let it go, right? You get some pullback and you see it come back down here. We can even move this lower, even though just for the sake of, you know, trying to explain it better. And you see it here making double bottom, right? So at this point right here, where you see it make double bottom, right? What you should do, you should look left. Okay, is this actually really support? Is this the level at which price has held before in the past, right? You should ask your question. So yeah, this looks like, you know, bullish, you know, pattern, you know, form nice W here. But is this enough for me to buy? I would say no. But since this W has formed at this strong daily support, you look left to validate that support. And has it been? Yeah. When it broke above, came back down, retested, and it confirmed itself as a support. It's no longer resistance, because why? This market came from the bottom, came above, closed above, gave us a retest, and we know we're gonna stick here for some time. So this is what I mean, look left, you know, look left to validate, you know, your zone. Since we have done that, okay, you can, you know, put the check mark. Yeah, this is looking good. So I have confirmation of my zone. I have, you know, reversal pattern, and I'm confident to buy this, you know. And this was, you know, amazing, you know, trade. If anybody took before, man, wow, that was 500 pips, you know. And this is not even, you know, having anything like extremely, you know, no extreme confluence. You just know this is your major daily support. It's a strong zone, and you have double bottom, you know, bullish pattern. Yeah, definitely. So yeah, now let's say somebody could question, okay, so I'm in a buy, how long should I hold it? Well, the thing is, with the gold and those GBPs, they're gonna move a lot. You know, they're gonna move a lot until you see, you know, some major retrace, or, you know, some fundamental that will make it drastically move. But we have this intraday resistance. So let's say you bought it not on the first, but let's say here on the second candle of this pullback, and you bought it and it came up here, and let's measure that. That is 74 pips, right? So now you may get scared away, right? Let's zoom in. You know, now it came to this intraday, you know, what was resistance at that point, because, you know, it got rejected, it came close below, got rejected here, rejected. And, you know, this is another example of what I meant vectoring, you know, where the candles leave those, you know, wicks, and that usually, you know, gives us pretty strong confirmation that this price is not ready to go higher. You know, it's rejecting it. So you see the same thing repeat here, right? But let's say you bought here. So what you can do, if you are confident to hold, even though you are up 74 pips, which is, you know, great gain a day, if you can catch 20 pips consistently every day, you're gonna be very rich in no time, you know. If you trade, you know, obviously every day. So you are up 75 pips. So what you can do, you can either move your stop loss at, like, let's say 30 pips, or even 45. You know, let's say you move it right here, right? And now you are trailing this, right? You're still in this. Let's say your daily goal was 30, you are up 45. And let's say here's your stop loss now, right? You're in profit, and you see this, you know, vectoring, indecision, like those candles right here, guys, that you see, like the one right here, where the body is in the middle and you have equal length of the wick to the upside and downside. Those are called indecision. You know, you never want to enter the trade on something like this. Never, ever. Why? Because indecision simply means we just don't know where this is going to go. You know, there's not enough buyers nor sellers to tell us, you know, okay, this is coming back down, or it's just going to continue up, right? But here we come another to the vectoring, which is those candles right here. You know, see, 3 strong wicks rejecting, you know, reversal back down. And there's your confirmation. Once this closes, kept going back up, and guess what? You are 45 pips in profit. After this candle, you move it further up. You know, you were 45, you're gonna add another 50 plus, you know, and this candle went up, and if you kept holding, you're up 150 pips. You know, if you decide to turn this intraday trade into the swing trade, you know. And then what it did, came to the next zone, it did had, you know, more run to the upside, came back down, retested that zone. You know, if you again have that question, oh, I'm already up 150 pips, oh man, I feel like I'm getting jackpot, should I just, like, this is gonna go to the moon? Well, that is when emotions come into play, you know. That is when greed comes in. Oh, I should just keep buying, adding positions. No, you should have added position on this breakout here. You know, if you go on, let's say, where did it go? I think I messed it up. I have to mark it so I don't lose it. Okay, it was right here. Let's just mark it up so we don't lose it. So we're gonna go on the 15, and here we are. Okay, so now we're gonna remove, because we know where we left off. So you should not be adding positions here in the middle. Why? Because it's in between the zones. So like we said, it closed above this, right? And it came back down. So on this retest, where you see that this is holding not on the bearish, but on the next bullish candle, you can add another position if you really want to turn this into the swing, and you just keep riding it back up. Or you already are 150 pips up, you just keep trailing your stop loss. You know, you can now put it almost here, and that kept going up. And you know, like we saw at the beginning, that end up being 500 pip trade. So, and this is another example, you know, validation of the intraday zone, because we are on 15 minutes and we were on the 1 hour. So we have to look for the intraday zones. Is this my right zone? Is this actually really support that this broke and now retested? We look left. Yeah, look at this. Look at this, you know, candles respecting that same level. Yeah, we had some false breakout here. It could have been, you know, New York opening or anything, and you know, it respected it. See, there was no clear breakout that, you know, should like scare you away from actually holding this after it confirmed. Does that make sense? No problem. You're welcome, brother. I'm definitely, you know, excited to see more questions. You know, whatever we can, you know, break down, go over, whatever helps. You know, like I said, I don't have anything that I'm holding back. Any questions that I'm able to answer, I'll be very happy to. And if I don't know, you know, some of us might know. And
you draw your zones on the daily?
which ones, like the green lines or the blue ones?
The green ones. I guess those are the intraday zones. I'm not.
Yes. Let me see who was that? Sorry.
David.
Hey, how you doing, brother? Yes. So the green zones are my intraday zones. You know, 4 hour and daily. You know, if I'm going for like a smaller move, even though USD usually moves 50 to 80 pips on the average on those impulse moves, yes, I definitely look on like a daily, 4 hour, 1 hour as well, because you see how we have rejection here. This broke, came to the you know, higher, bigger zone resistance, came back up, then broke down, retested, came back down to those zones. So the reason I have more, it's not for a confusion, because this tells me, okay, let's say if it slows down in this one, no, it just kept straight going through. But I know I have my other zones, and I know one of them will be rejected, right? And this is the one that got rejected. So now I know it's time for me to take my profit and be happy, because I'm definitely taking profit if I enter maybe not even on this one, but this one right here, and it came down 250 pips. I'm definitely taking that and going, on my day.
And then I guess TradingView automatically saves your markups, or do I have to like set it to save it for each chart or each pair?
Great question again. It saves by itself, so it saves it by default. Once you put it up, it's saved for you.
Oh, okay, cool.
Yeah, and the great thing about it, we already know we are in this major zone, right? And we have been in this zone since June 20th, right? Yeah, 20th June, and now almost 1 month. So when you see something like that, that is a great thing, because we could have just marked this like 2 weeks ago, not 2 weeks ago, almost a month ago, and we just trade zone to zone.
Right.
You don't need. The only time I personally really need to make a new addition to my zones or anything like that is if this happens, right? Where's this? If it breaks right here and does any like shenanigans, whatever it wants to do. So now we are in the fresh new zone. So now I have to go back left. I have to pull up my weekly chart, and where this gonna go? It broke above this resistance, right? I'm gonna add my line chart, and where's the next zone? So will it stop here, or will it stop here, which is stronger zone? We have more bounces off of it, where it's gonna go. But until this happens or it comes back down, I don't need to worry about all this. You can literally just ignore all this, because you know your zone that market is playing in currently.
Now you would still do that even if say it was near the weekly and you had some news that came out that pushed it past that zone, you would still mark it up for that news, even though it's probably going to retrace?
That's a good question. I will first wait to see what happens, because you see this week here and this week here, that doesn't scare me. That was just some impulsive move and it pulled back up. And when that happens, that's a great question. When that happens, you watch next 2 to 3 candles. You see what they're gonna do. So this was just this was pretty much news. This had to be news. This is 4 hour, and this week is huge. So what this candle is called inverted hammer, right? So this candle usually is a sign, one of the signs for the bearish reversal. But I wouldn't enter on the next candle, because that in itself is not enough for me, because I know my resistance is here, and it's let's see, it's 100 pips away, So the reason I'm not entering on the next candle is because I can end up in a drawdown of 100 pips, which exactly happens.
Right.
Now we get 2, 3 more candles that are additionally confirming that this won't go higher, right? Because why? We have this vectoring into the weekly resistance. And now I'm confident after this candle that I'm gonna sell this, and we end up doing that, and we get 200 pips.
Gotcha.
Yeah.
Yeah,
So,
that was always an issue for me. I kind of would get in the trade when it's already too far gone in a certain direction, and then it'll end up just reversing.
yeah, and that's why we are here, to together, come to that same page where we don't do that. That's why I try to emphasize to people in a chat. If Sean or if I already paused the trade and that trade is already 20-30 pips in the profit, do not enter it. Because our position now is break even. It's risk free. We are just either gonna take our profit, which Sean mostly does it like 20 pips. But for me personally, I'm just gonna, let it ride. And if it goes to 30, 35, I'm putting my stop loss in the profit, But at no cost, I'm gonna let my winning trade end up as a loser. That is where money management comes into the play, which is as important. Actually, even more important than your technical analysis. Because if you cannot manage your trades, you cannot, end up profitable in the long run, because you're gonna let your winning trades end up as a losers. Because what happens, let's say we entered and we were in a profit, right? And we go to a brunch, we go to barbecue, to birthday party, meeting, whatever, and we are not able to, follow back up with this. And we come back and Trump has tweeted, something bad about China, or, we are progressing talks with North Korea. So that can move it like crazy. That fundamental impact just brings that emotion, with the investors, because big hedge funds and the banks, they wanna take advantage of it. They're gonna pump billions in it and just push it. And now your trade that was up 20, 30 pips, now you end up in a drawdown, or even hit your stop loss. But you should have stop loss in place at the first, at first, you already should, when you go in a trade, you should calculate, okay, I'm going to risk 30 pips, right? And I'm going to go for 60, 80. That's a great, as long as it's 2 to 1, that's a good trade for me. I never look for the trade that is 1-to-1 risk reward. That is not worth me. I would rather not trade than risk, 1-for-1, because I personally prefer to go 1-to-3 or 1-to-4, because if I do that, I can lose 7 out of the 10 trades and still end up profitable, and that is about that, trade plan and money management. So
Yeah, that makes sense.
yeah, and another thing, let's say we are up 20 pips and we move stop loss to break even, right? And due to numerous reason, this reverses back and it hits our stop loss at the break even. So number one, we are not in the loss. Number two, we can go back to it and see, is this just like a strong pullback due to some uncertainty in the market? And do we have another entry opportunity? You can always enter on the trade again, but you also prevented yourself from this going further and losing. Maybe something like this will happen too. It hit our stop loss here and it pulled back strong. So what now? We already, let's say, pull here. So what now? We know, okay, so this is probably another retest of this weekly resistance. So now we have even better entry. Now we have even better opportunity. And that is why Forex is more of a, what they say, sitting on your hands, more of observing and just acting at the right time, not jumping back and forth, with the emotion. If you are, hopping on and off the trade, then you're just trading with the emotion, you are going with what you think will happen. And that should not be the case. You should trade what you see, not what you think, not what you would like to see, because that is just emotional trading and that doesn't end up well. And I tell you from personal experience and many people that I have seen, because when I started, I wasn't listening, and now I know this, I know I'm gonna be right, and I was losing until I took a step back and I was like, let's look at this a little bit better, and with something that makes more sense. So what would happen? We will get even better entry, and we know it's going to come back down because we already have vectoring, and it's probably would end up in the next wick, because the spike usually leaves wicks behind. Those spikes, that's just gives you another opportunity to enter the trade with the better entry, rather than you being in a loss. And most of the time people will be panicking, if they entered here and this came back to this weekly resistance, like I said, that's 110 pips. And if you just got off the meeting and you have rough day at work, or maybe you just got home and your spouse is mad because you didn't bring her Caesar salad or whatever the case may be, your emotion will take away. You're gonna close this trade without knowing that this just gave you another retest of this, and it's gonna come back down. and you just closed in a big loss, 100 pips, depending of whatever lot size you use, that can be a lot of money. So by observing this and being patient, waiting for the trade setup to come to you, you avoid all that frustration and emotions and potential losses. So I hope that helps and makes sense.
Yeah, absolutely. Appreciate it, man.
No problem, brother. Let's see, we have a bunch of questions. Yes, this does make sense, and I learn a lot from. I'm happy to hear that, Harry. We're gonna have these, on the weekly basis. So, happy that you having benefit from it. I have to get ready for work. No problem, brother. Have a great day at work, and we're gonna talk throughout the day. We have a question from Jaim. I'm sorry if I don't pronounce that right. What does 1 to 3 or 1 to 4 mean? I'm absolutely just trying. Okay, great question. So what 1 to 3 means is risk to reward, right? Okay, we're gonna write here. So risk, reward, right? So if we go for the trade that is 1 to 3, and our risk, let's say, is 20 pips, right? 20 pips is our risk. So 3 times that would be 60 pips, right? So this is what we refer to risk reward. 1 to 3. We are risking 20 pips, but we are targeting 60 pips. So that is something that you like to see and find the trade set up for something like that, right? Because this is much greater reward rather than your risk. You don't want to do opposite way, risk 60 for 20. That's not a good trading plan and approach at all. So hope that helps. Exactly, Anthony, exactly. Okay, Harry also explained, yeah, perfectly. Yes, stop loss. Yes, stop loss is in a place that in case you sold here, but this went up 500 pips, you're not gonna be in a negative 500 pips. You're gonna your trade will be closed at 20 pips, so reduces your loss. That is what we always want to do. We want to reduce loss as much as possible, and maximize our profits. And that is why we always try to calculate our risk reward. The better reward and lower risk, the better the trade is, and our return on investment when it comes to forex. Yeah, sure, definitely. So do we have any more questions? If not, I was gonna talk a little bit about trading plan. Let's see. Okay, I think we don't have any questions at this time. Wait. Oh, not a problem, Sean. Not a problem. Get some rest. We'll catch up tomorrow. Have a good night. So let's talk about trading plan. So number one that I would recommend is obviously, trying to find out based on your own schedule, what session would I trade, right? Is it Asian, London, or New York, right? So once we know our schedule is, let's say 9 to 5 every day, we can go to bed early, and then we can, get up around 3 a.m. to trade London. So, or if you work overnight and you come home to the, in the morning right before the New York opening, maybe that is what works for you. It's really, based upon your schedule and your availability to trade, because obviously trading, requires, time investment, as much as, money. So once you determine what session works for you, you're gonna choose the pair. If you are trading Asian, the pairs that move in this session are AUD, NZD, JPY, right? Those are the main pairs that move during that session. So anything with GBP AUD, GBP NZD, GBP JPY, Euro AUD, Euro NZD, Euro JPY, not so much of a dollar related pairs. Why? Because it's night in the US. All major institutions are closed until the following day when the New York opens. So I would suggest pairing with GBP and Euro, right? Any of these pairs that you might find comfortable trading, or you see a good analysis on it. So next we go into London. If you are a London person like myself, I'm definitely doing GBPs, unless I see something better on Euro. I will go over to the Euro, and the pairs I would add anything with AUD, NZD, JPY2, because that is overlap from the Asian into the London. So there's gonna be movement with these pairs. So I'm gonna definitely look for that. And then if you wanna do New York, obviously it's gonna be USD, and you can pair it with any pair, right? Meaning you can trade Euro USD, GBP USD, USD JPY, USD CHF, because they all move during the New York session. So that's another thing. The next point I want to say is risk management, right? Risk management. So what I mean here, I recommend 0.01 lot size per every $100 in account, right? Meaning you are only risking, I don't want that. You are risking, your risk is very limited. And let's move this so we can see this trading plan, right? So only 0.01 per 100 in account. So that way you're not over leveraging, and you are allowing yourself to hold the trades for a little bit longer in case that you have to, especially if it's a swing trade. For the swing trade, stop loss can be anywhere between 50 and 100 pips, where you're targeting, a couple hundred pips in the long run, 3 to 5, 600 potentially, depending on the zone. So for that reason, I recommend that. Let's see, we have a few questions. Yeah, definitely, but okay. Oh, okay. Yeah, Anthony, no problem. This will be recorded once we get it uploaded. We'll try to convert it in a little bit smaller file, so it can be easier and faster uploaded, so it can be watched again. So this is the trading plan I would recommend. Also, definitely journaling your trades if you can, because like I mentioned earlier, that will help you find that pair that you have a high winning percentage with, and that gives you confidence trading it. And because like trading all of the forex pairs, it's very exhausting, and honestly it's impossible to predict all of them. If it was possible, then people will be extremely rich just doing this. But it's not something to get rich overnight. It's get rich over time by having this plan, by doing the things that we cover tonight, reducing your risk, not entering the trade early, not closing it early, whether it's loss or profit, just looking for that thing to maximize, as much as possible, reduce loss and maximize your profit. And because forex, at the end of the day, it comes to the probability. It's us against the banks, against the hedge funds, and we want to have that thinking outside the box. We don't want to just go with what our emotion is pulling us towards, or something that we might think will happen, rather than what market structure gives us and tells us to do. So I hope this helps a little bit, for you to have that better and more confident approach to the trading. I don't know if you guys have any questions related to the trading plan. Feel free to say.
Outside of the trading plan, just from your experience for gold, does it move during London, or is it mainly like a New York session?
Great question. So in the past month, gold has been the most volatile pair in the market. So at the present time, which we are talking in and trading in, it can move during any time. The only time the gold really doesn't move, like all other pairs, is post New York until the Asian. So that will be, let's say, starting to be safe, starting 2 p.m. to about 7-8 p.m. Eastern Standard Time.
Gotcha.
Other than that, there's chance for it to move. It moved here. This was actually morning. This was New York. Yeah, so see, this was a London, 6 a.m. kept pushing. New York kept pushing still, and then you see 2 o'clock comes and we get this sort of a consolidation, right? This impulse move that already happened, this happened during the London, right, and New York together. 235 pips. A beautiful trade. And now we have this sideways movement, right? And for me personally, when I look to enter, is between 2:45 a.m. and 4 a.m. Eastern time, because from the midnight to about 3 a.m. orders are accumulating, right? Accumulating in the market pre-London, right? So when the London kicks in, and the banks in Europe open, there's going to be high liquidity. There's a lot of rich countries in Europe, with a lot of money, and that is when they start placing their trades, and you're going to see some movement. Looking at it right now, it could kept falling down a little bit more, at least to this 1416, which is intraday support. But right now I can tell you exactly what they will do. We'll have to watch it. Now it's just consolidation phase, and exactly it is. So you see this indecisions. It's weakening to the downside, so there is no seller's pressure at the moment.
Mm-hmm.
So it could very well come back up, close above this, and go to this weekly resistance. So I hope that answers. But yeah, generally between 2 p.m. and 7-8 p.m. Eastern Standard Time is the low liquidity in the market. And absolutely never ever you want to trade between 5 p.m. and 7 p.m. Eastern time, that Tokyo session. First of all, between 5 p.m. and 6 p.m. Eastern Standard Time, or to make it easier for everybody, the first hour of the new daily candle opening, you should never be placing trade, because during that 1 hour, all world banks everywhere in the world are closed. With that being said, there's no real liquidity provider in the market. And that's why you see the spread, anywhere between 10 and 30 pips, on exotics is, up to 300-400 pips. So that is when brokers can legally trap you. That is why you guys see Sean, when he, opens the trade before that new daily opens, he says remove your stop loss. He doesn't tell you that because he wants you, to just lose even more. No, because that spread will take you out of the trade, and you can't do anything about it, because that is, technically legal in the market, because there's no liquidity provider. So if the spread on gold is 2 pips, maybe during that hour will be 20, and you cannot blame broker for that or anybody. It's just one of the forex rules, and not many people talk about it, but it's very, very important. And you should not panic if you see that new daily open, and you go from drawdown of 2 to 20 pips. That's not actually it. That's why you look here. You look where actually the price is. It might be at 14.22 and you are in a buy, but it's showing at 14.20, because of that spread. So the spread is at 14.20, but the price is still there, and once it settles down over the next 2 hours by 7 p.m., you're gonna see, your trade come back to normal, So it should not trigger panicking, just because, but that's why I don't usually trade, past 2 p.m. and before 8 p.m. Rarely even then. So hope that makes it a little bit clear.
Got you. Yeah, that definitely helps.
Is he still? Hey, Trent. I will text him. I'm not familiar, Harry, to be honest with you, about the IQ option. So I will try to get Trent, see if he knows about it, so we can get your question answered. Supra, yes, this is getting recorded, and as soon as we are able to, convert it to uploadable file, we'll definitely, be happy to share that. Okay, there's a second. Yes, perfect. So I use MetaTrader 4 as well, Harry. So MetaTrader pretty much is just the general trading platform. I don't use it for analysis. I use TradingView just because it's so much more clear, and you can see it better, and the candlestick representation and also line charts. So I use that for my analysis, but I do trade on my MT4, meaning I'm just entering the trades through my MT4, because MT4 allows you to connect your account no matter what broker in the world do you have, because it allows all of the brokers to be connected in there, so you can just connect your account and place the trades. What else apps? So good question. Let me see. I have, okay, so FX Street, right? FX Street. So you can use this for fundamentals, right? Okay, I understand that. Compose. There we go. So you can use this FX trade. I am opening it on the website, but they have the app, I believe, both for Android and iOS operating system. And then you will just go to the economic calendar, and it will list, all the economic news with the, level of volume of their impact. For example, this was for, yesterday. We had some JPY news. They were like the medium impact, and we had 2 AUD major news, right? We had unemployment rate. They kept it the same. You can also see previous here that tells you what was the previous, report on this particular economic data. So it was 5.2. Also, prior to the release, you're gonna see this consensus. That is pretty much what they're anticipating to be, But you should not be led by that, because it's never guaranteed that they will actually predict what actual will be, which is right here. When 9:30 Eastern Standard Time, the person that is supposed to release this economic data, they will come out and say, okay, yeah, we're gonna keep it 5. It was 5.2, for the month of June. Unemployment rate was the same as of the month of May, right? So that's this is just a guessing, but until you see the real and truthful report when they come out and release. Same thing here. So you can download this app. This is very useful. Another one that I will recommend you guys, it's called Easy Currency. So Easy Currency, capital E and capital C, and it's one word. It's combined into one word. I have it on my iPhone. I cannot guarantee you that it's also available for the Android, but I would suggest you go on Google Store and try to check on it. So I like it because when you open that, pretty much this app gives you a dashboard with the weakest and strongest pair, anywhere from on the 5-minute to a daily, for the overall 24-hour. And plus it has a tab where it says calendar, and it also has those economic news listed for today. And you can also play with it. You can set the filters. I usually have my filter set for the medium and high impact, which is this orange and red sign. Low impact news are pretty much non-important as far as bringing that volatility in the market. Even medium, it can make it move for the GBPs. I think it will, because they are just volatile without any news. This just can add on to it. But when you see the red folder, you should be a little bit cautious, especially if you were in AUD trade prior to this release. Like this is way off. You see what I was saying? Previous was 45,000. They predicted 10,000, and it was only 5,000, in unemployment change. So it's a pretty bad, outcome. Not even close to what they, predicted, and definitely far off from what it was, for the month of May. So that those are important, the red ones, and medium as well can have, depending what the actual is. If the variance is way off, like it is here, it was 609.10 billion, and now it's 14,399. So this is very positive for JPY. That's why you see, pairs against JPY falling down, because JPY is just strong. They have some really good, economical reports, that, shows strength in their economy. Their imports and exports, fell down. But if you look at it from, the economical perspective, it's pretty much close. There's something called net trade balance, and it calculates, average of imports and exports. So this is not way off. There is something concerning as compared to this. Merchandise trade balance, it's very positive. So if from my understanding, they are exporting more than what they are importing. So that's always good for the economy. The more you produce within your own country, the less need you have to import from another countries. And it's just I believe common sense. Let's see. Yes, FX Street. You have another one, Forex Factory. Forex Factory. You can use this one as well. It's pretty much same thing as the FX Street, but just obviously the page setup looks a little bit different, and it brings immediately the calendar for today, rather than in FX Street. You have to actually go to the economic, but FX Street offers much more news, and you can read on the major pairs. If you are interested in Euro USD, so you're going to open this, and there's going to be usually some reading that is most recently, like 4 minutes ago. The title says signs of recovery, so you can go through here, read. It's usually some expert working either for the bank or for bigger financial fund, giving their opinion, but you should not just take this lightly and think that okay, this person said this, they work for Commerzbank, they are professional in this field, they probably know very well what will happen. No, this is just their bias on based on what they see will happen, but that is one person against rest of the world. So, but those readings are good, they definitely are good. Some of them, everything extra that you do besides the technical analysis, it just adds onto the confluence. Confluence means nothing but having more confirmations. They said that it will be recovery above the March and mid-June lows at 1.1181. So and let's hold it down. Something else bias is real. So they thinking that it's gonna be a bullish run from this zone right here, right? So if your analysis tells you the same, okay, based on my technical analysis, that was actually my zone for the buy, right? And this is now giving you even more confidence for that, because you already saw that before you even read this. And you can just do that. I don't honestly pay too much attention to this. I just look at my candles, look at my zones, because candles tell you the story. Like this on gold, there are sellers that want to bring this down, but there is pushback on it. It is below this intraday resistance. So sellers are still happy because it's not breaking back up, but it's not yet confirming that this will push down, because it's leaving all these wicks here, right? So sellers and buyers are fighting here, and until London opens, we won't really see who is going to start winning and where this will start pushing. See any more questions? I don't know if you guys have any question about anything, Forex related, that, you might be able to answer, go over, even if it's something that was already covered, because we are on the call for 2 hours, doesn't matter. I'll be happy to go back, few times if need be. we will be doing this on the weekly basis, and I will try to do even more than just Wednesday night or whatever day we find most suitable for everyone to be on. There will be recordings, so you can go over it. So yeah, I'll give few minutes. If we don't have any questions, we can close it out, and I will get with the trend to work on converting this and trying to little shrink it in size so we can get it uploaded faster and provide you with the link so you can watch it at your convenience. And also by going over it again, you might spot something and you might need more clarification, and you can definitely reach out to me, DM me, write it in the chat. Someone might have answer before me if I'm busy and stuck doing something. We are all here as one, so there's no shame, there's no reason to hold back on any questions or knowledge from each other. Good question, Harry. How much time do we spend daily for the forex trading? So for me, because I'm really passionate about forex. Okay, good question. And what do we do to improve ourselves? So for me, because I'm really passionate about it, I try to spend as much as time as I can when I'm not at work. So meaning before and after work, I spend most of my time actually trying to engage, with the chat and with the people who, message me every day in my, inbox. Just try to, find the best answers to help them, with whatever the confusion might be or, misunderstanding, additional clarity. But as far as me spending the time on the charts, I honestly don't spend much time. I analyze my pairs before on Sunday. I look at them. I see if there's any new fresh zone that I need to find additional support and resistance for. Anticipate the target for the upcoming week, and unless like I said, fresh zone is being penetrated, I already know that I have it marked up for previous 2-3 weeks, so I don't honestly need to spend much time, at the most 30 minutes on the charts, because I know my pairs, I know what I'm looking at, and where they're gonna go. But throughout the week, I like I said, I mentioned I love to trade London session. So I stay up anywhere till like 4 a.m. and I just look for some confirmations to enter my trade. Whether it's fib rejection or double top on a smaller time frame, anything that will give me confidence whether I should buy or sell. Or if I don't find anything, I just go to sleep and live to trade another day. Because there should not be that urge to constantly trade, right? You should not be trading 5 to 10 pairs every day, because it's hard to keep high winning percentage if you do that, and it's really hard to manage that many pairs. Sorry, let me just get some water. So yeah, I recommend not having more than 2-3 pairs open at a time. Once one of them reaches your target and you see good potential or on a next trade, you can add it. But I wouldn't over trade, because over trading is as bad as over leveraging, right? So you don't want to develop that habit because it will definitely, you know, lead to, you know, emotions taking over if you have 10 trades open and 8 of them are negative, you know. So it's much easier to manage 2 to 3 trades that are, you know, good setup, good quality of trades, and you know, you're gonna win in a long run like that. There's no doubt. And what I do to improve myself personally, I constantly read. You know, I'm part in like many trading groups. You know, I have made a lot of connections throughout 2 years of my forex journey. Uh, so I just engage with people. You know, I have 2 mentors too. So when they share any data, I definitely look at it. You know, any just anything, you know, that will help you learn. You know, there's so many trading strategies out there in the market, you know, that are working for people, you know, and usually you should start by mastering one and seeing, you know, what works for you, and be open-minded, be open-minded in terms of, you know, you trying to learn more, maybe different strategy, you know. I have a really good friend who is trading with SMAs, you know, with the moving averages, and he's absolutely doing great. Me personally, I don't trade like that, but I am open to it. You know, I have been using moving averages before for scalping, but you know, I'm not yet that confident with it. So, and I wouldn't switch my trading, you know, technique and the way I trade because it's working out for me, right? But I am open to learn more to help me, you know, confluence with my own trading, like K2 indicators and K2 strategy does, you know. It just gives me that extra confidence, you know, and another confirmation for my trade, you know, when it aligns, you know. So the more confirmations you find, the better will it be, you know, and the higher probability. You have a lot of strategies at babypips.com. So that is the website where you can find all kind of different strategies. I don't have like specific link for it. I know Baby Pips has 12 and 26 EMA cross. Yeah, that is like in the chat name, but my Telegram real name, let me see, it should be this. So that is like my Telegram name if you search me by, but when I post in a group, it says Da Vinci, but that is my Telegram ID, the one that I just wrote in. So any questions you have, anything, you know, feel free to reach out to me. I will tell you up front. I always try to answer as soon as possible because, you know, I don't want people, you know, waiting for me, or, you know, just thinking that I'm, you know, avoiding them or anything. I don't do that. That's not how I was raised, and I don't like that. You know, I'm very, you know, diverse person, and you know, I like to, you know, have a good, you know, connections and relations with everybody. So if you don't get answer for me, you know, in a short you know, period of time, that means I'm really stuck on something, or I'm at work, you know, working on some important project, and I will definitely, you know, get back to you guys as soon as I can, you know, and it will not be, you know, just left unseen and pretend like, you know, I don't see what you wrote and, you know, what are you talking about? So, yeah. For the Anthony question, I didn't ignore it. Your question was, what should our homework be? So your homework, you can pick any of the topics that we covered. Since you started trading recently, I would suggest definitely start journaling your trades, whichever ones you take. Try to narrow down your focus on 2 to 3 pairs to learn their behavior, to learn the patterns that they are making in a market, their key levels, and that will increase your winning percentage by a lot. I can guarantee you that. Excuse me. Yeah. Thanks, Harry. No problem, brother. There's no, like I said, we are here, to work together, help each other. Because tomorrow you might come across something, that is like really, next level, that you can share with us, or David or Anthony, or anybody. That's the benefit, of us growing as a community, and empowering and helping each other. Because I'm not the smartest guy in the group. I'm not the best. I never would ever claim something like that or anything. But what I can tell you, I try every day, to learn something. Anything, that I can also share with you guys, or with whoever I can help. So that is always my daily goal. Anthony, what are you saying? Anthony bought gold. Let's see. What was your entry, Anthony? If you don't mind sharing with us. And what is your stop loss? Yes, we'll give him a second. You button 1421. Okay, so let's round it to 142. So you bought it right here. Okay, well, you are up about 14 pips. Not bad, Once it goes up, maybe 20, 25, you can, protect that entry, or depending how much you are targeting. Hopefully it works out well for you. I'm not entering it yet. It's not showing anything of what I like to see. This is long wick, man. That is a strong rejection right there. So I don't know. I personally don't like it for a buy yet. Definitely don't. Yes, that is strong rejection. But also, if you measure it with the fibs, it's also rejecting 50. So until this breaks above 1424, I'm not confident about this buy. And I personally hold bearish bias, that this over the today's day, because here in US on East Coast is 2:15 a.m. I believe it's gonna come back down. But I hope before that happens, since you're in a buy, you get your nice scalp here. So, but yeah, this is you know, why I love Fibonacci measurements. You know, gives you that you know, eye on the chart. It tells you the story. You know.
What's a good video you recommend for me to watch for learning the Fibonacci or how to use it?
Great question, Dave. I'm gonna find it right now. Great question. Here we
Usually
go.
do a lot of studying on the weekend. So
Definitely, this will be the one. I'm gonna share it with you guys in the chat. And let me just try to open and make sure that's the same link. It is, yeah. So the link is in the chat.
Perfect. Thank you.
Chat box. So that is the one that I watched at least 20 of them, and that is the one I always recommend when somebody asks me about it, because I believe that is the best one. Yeah, it is 20-minute long, but it's a good explanation. It shows you exactly how they are used, and also in a reverse order. When you know, Harry had question about fib extension. So fib extension and reversed fibs is the same thing. You just add you know, extra levels like I have, you know, like these 1.27 and 161.8. You know, if you were using just fib extension, you won't have this. You will just have 127, 161.8. And I believe 2.16 is the next one. So, yeah. Yeah, Anthony, yeah. I have a saying that, you know, fibs don't lie, you know, and joke aside, but, you know, when you see people, I may have mentioned that earlier, or you may have heard me mention it already, when people tell you, you know, I sniped this entry. You know, sniped meaning they're referring that they entered on the wick, they had a wick entry. That didn't happen just, you know, by luck, you know. Maybe it happens by luck, but if you see somebody constantly doing that, you know, it's because they use Fibonacci's. You know, they use the Fibonacci tool to determine, and you know, because it tells you, you know, I already, you know, see this indecision. So if I have a strong confirmation that this is going to continue back down, I can put sell limit at 50 or 61.8. So even if I had sell limit on gold at the 50 Fibonacci, which is at 1.42343, my entry is already on this wick. You know, that is what I'm saying. You see, my entry is on the wick at the moment, the way this candle looks, right? So that is, you know, how you get those great entries, because the power of Fibonacci is just great, because it's like a measuring algorithms of the market, you know, and it's named after, you know, a great I believe Italian mathematician, you know, whose you know, calculations and, you know, predictability was just amazing. So
That's good to know. I never understood how you always can come up with your limit orders. I mean, I can always do, like, you know, the stop orders, but I never understood how you and other traders do the limits, because I never know when it's gonna you know, actually hit a level and then reverse.
yes, exactly. Yeah, those are done based on Fibonacci's. Those are
Got it.
done. Yeah, definitely. I was gonna check GU because I was looking to enter this, and I actually like it. Let's see. You see how it broke and came back up, retested, and retesting this zone again, intraday zone, and I'm pretty confident this is coming down. See, right there, because this is the key support, because it broke weekly support. So this is now weekly resistance. You know, I still didn't change it, but that is now. And if we add fibs, I'm gonna do that to bring it. And you see this, David, look at that 50. See, this is not coincidence, you know.
Wow. Yeah.
People think this is, you know, yeah, you just, you know, playing with. No, there's nothing that you play with. Look at that 50 retracement, and it stopped. And now it's retracing almost there. And you see how it's aligning with the intraday, you know, resistance now. You see, the Fibonacci is not just like luck. It's you know, market measured, you know, levels. You know, and it's, you know, giving you confluence with this resistance right now. You know, it used to be support here when it initially had this false breakout off of this weekly support, but now, you know, it came back down. So now this breakout is confirmed.
Got it.
So there is no coincidence, you know. That's why I just love Fibonacci. You know, price action in Fibonacci, and you don't really need much. You know, you don't need nothing fancy. I see people using like five indicators. You know, stochastic, MACD, RSI, moving averages, Bollinger Band. You know, just making a laser party. You know, why would you do that? You know, when you just, you know, have a clean structure here. You know, it's easier to see, easier to follow, easier to execute. You don't need to complicate trading. You know, trading should be simplified to the point where you're bored. You know, oh man, okay, I'm entering again on this 50 retracement. Yeah, another day, same story. You know,
Right.
it literally ends up like that once you trained your eyes and you are, you know, able to place Fibonacci's properly. You know, it just becomes repetition. You know, rinse and repeat. And you see, it's rejecting it again. Yeah, definitely. I mean, and that is the reason I will be very honest with you guys. I have personally invested 10,000, if not more than 10,000, on forex education, my own money. You know, I have never been sponsored for anything, nothing. Even this, I have this tab open. I wanted to show you about APRE fund. So what APRE fund is, it's like a hedge fund, right? Not many people know about it. Their headquarters are in Seattle. So this company has made 15 billion in forex last year. You know, people don't know about it because this company or this fund, they don't promote. You know, they don't do any marketing. You know, they are really hard to get in because to be able to get funded by them, they do provide funding, but you have to complete their academy to qualify for funding, and you have to show, you know, consistent winning percentage and winning profits, and their risk is 2% a day. Once your trade is like either 2% in a drawdown, or, you know, it hits stop loss 2%, you cannot trade for the day anymore. You know, that's how strict they are. You have to wait for the next day for you to trade again, and that's why they had such a major success. So, you know, I constantly, you know, I'm educating, and I'm not even honestly concerned with you, you know, to try to get funded by them, but I'm learning their stuff, you know, like this is, you know, reading on the price action, you know. And unfortunately, I cannot share this, not because I don't want to, or, you know, I'm holding it back because I paid for the academy or their you know, education. It's because there's no option to save this. That's how they made it. You know, it's confidential. You know, you can just zoom in and out. You know, there's no save download button, nothing. You know, it's just read on. So that is why, you know, I always believe in investing in yourself. You know, in your education, and it's just like, and I seen what I was gonna say. I seen all of this, you know, different strategies with, like, I've been personally with 5 or 6 forex companies, actually 5 before K2. This is 6 now, and, you know, people just have different, you know, approaches. But what I have seen, And the people I have seen being more successful is, just using simple price action, just clean chart, your key zones, your supports, resistances, patterns in the market, breakouts, continuations, there's so many of them, and once you start going on with your own education, you should, definitely start learning those, patterns in the market and reversals. And great book to read is, called Candlestick Bible. It tells you all about Japanese candlesticks, like formations of them. You have 3-bar reversals, doji, hammer, inverted hammer, all different kinds, but you don't have to overwhelm yourself too much. Take this, seriously. Try to, put at least, some effort daily, even if it's 30 minutes. It all adds up. It's just a process that, you will be very proud of yourself. Once it all adds up. Same thing with the compounding. Small lessons, made up the course. Or every day one chapter of the book eventually makes up the full book. So it's not something that just happens overnight. My first year, I struggled a lot. Besides a lot of money that I invested in education, I also lost a lot of money. And the reason why I lost a lot of money is because I was all over the place. Today, I see this strategy, right? So I'm like, oh, I get all hyped. Yeah, let me try this. Tomorrow, somebody comes, shows me Bollinger Bands. I was like, yeah, man, that makes sense too. Let's try that too. And third day, somebody comes, moving averages. Oh man, this also looks really cool. Let's do this too. And now I'm combining 3-4 strategies that I'm not even mastered. I didn't even master them. Somebody who trades with them for a while and who is successful shown me, and I'm like, oh man, if that person can do it, I can do it too. Well, that was wrong thinking, wrong mindset. I don't even have one that I have mastered, and I'm trying now to do 4 or 5 different ones, which doesn't make sense. Ultimately, that led just to confusion and, being all over the place, too much input. So you definitely want to, narrow your vision. What I like to say, tunnel vision. Just pick one thing and give it your all. Give it some time to develop it, to perfect it, and I guarantee you, you're gonna see amazing results. Another thing, I don't recommend, being in like 50 Telegram channels. I know you probably come across a lot of promotions and a lot of stuff. That will just confuse you, because you will become dependent on other people's analysis. Maybe, you see me now showing you this on GU, and you get off this call and you are in like 3 more chats, and, somebody showing something differently, and now you are confused. Oh, well, I just got off the, webinar with Anes, and he showed me this. Now that person is showing something else, and now you don't have your own formulated opinion on it. You are just confused because I told you something else and this person tells you differently. So now, you also have, a trust question. You don't know whether you should trust me or that person. Well, you should not trust me or them. You should, take a look at yourself and see if it makes sense for you. Well, and that's what I would suggest you, because we all have, different learning curve. We have, things that we see a little bit differently. And, I'm not saying that, maybe my strategy will work for you, but maybe you can, start building, off of this. And, if you find something else that makes more sense for you, you already can learn this, and, it will be additional confluence for you. So just give you more confidence. So That's what I would honestly say. Yes, Candlesticks Bible. Let's see if we have it. I mean, if I have it. Let's see. And yeah, one book I'm gonna share. It's called Trading in the Zone by Mark Douglas. Amazing book on not just trading, but like investing strategy, investing approach in general, whether it's stocks, binary options, indices, forex, futures, penny stocks, whatever you do. It just it's building that mindset, to not get carried away with the emotion of trading. So let's see. Right here. See, those are all forex books, all forex books. Oh, that's good. I guess I should just search. Oh, here we go. The candlestick trading bubble is it is right here. So I'm gonna put it in a group right now. But yeah, you see how many books I have. I have what? Let's see. So that's 33 times 1, 2, 3, 4, 5, 6. I have over 200 books on forex. So um, I don't know why this stopped sharing. Oh yeah, I have 200 of them. So I'm gonna definitely share it now in the chat. The K2 Trades chat, forex books. Rewire. Okay, that is weird. Let's see if we can do it different way. All right, so it's uploading now in the chat, so you guys can. Okay, so it should be in the main group. And the second one was Mark Douglas, Trading in the Zone. I guess I'm going the wrong way. Okay, let's put this one in there too. But that is not what I want. I want. Where are you? There we go. Okay, so you can start at your own convenience reading those three, and let me know, how it goes. What are your opinions about it? So, but yeah, GU is, rejecting that, like, I thought it's gonna do. So that means our GJ should be on its way. Let me know, guys, if you have more questions or anything. Or we can just wrap it up for right now, and I will try to look for something additional for the London.
Yeah, man, I definitely learned a lot. Appreciate your time.
Yeah, absolutely, brother. We're gonna try to do this as often as we can, and it works for everyone. And if not, we will keep recording it so people can watch it. No problem, Anthony. No problem, Harry. It's my pleasure. Like I said, I love sharing whatever I can, whatever can help you guys, and you can help someone else. And because what goes around comes around. Definitely believe in that. It's not everything about the monetary. That comes eventually. No matter what industry, what profession you do, if you commit yourself, success in form of money is just byproduct of your hard work, and consistency. So okay, then with that being said, guys, if you don't have any questions, I'm gonna go ahead end this, and we're gonna continue conversation in our chat. And for those who go to sleep, hope you get some good rest, and have a great day tomorrow. And we will keep in touch. Okay. All right. So we don't have more questions. So wish you guys a good night or morning or noon, afternoon, depending what part of the world you are in. And I will talk to you in the chat. And see you guys there.